If you're thinking about investing in UK property in 2026, this could be the most important video you watch all year. I'm going to reveal the top 5 locations where new investors are already making serious returns. And by the end of this video, you'll discover a hidden opportunity that even many seasoned investors are overlooking. First up is Manchester, the heart of the Northern Powerhouse. The city is booming, with thousands of new jobs, major infrastructure projects, and ongoing regeneration schemes that are transforming neighborhoods and creating incredible investment opportunities. Apartments near transport hubs, purpose-built student accommodation, and mid-priced family homes are in high demand. Investors are reporting rental yields between 6 and 8%, higher than many parts of the south, while capital growth is expected to continue steadily into 2026. If you're new to property, Manchester offers the perfect combination of affordability, high demand, and long-term growth, making it a prime location for first-time investors who want to start strong. The city is not just about high rents. It's about a consistent pipeline of tenants, strong local economy, and a market that continues to expand despite wider economic uncertainty. The next city you cannot ignore is Liverpool. Many people overlook Liverpool, but it's a city on the rise with massive regeneration along the waterfront and in the city centre. These projects have created premium rental areas and investment hotspots that are attracting savvy investors. Rental yields here are often 7 to 8%, and the city still offers lower entry prices compared with London or the southeast. Properties near the waterfront, multi-unit conversions, and areas close to major employers are particularly attractive. For new investors looking for high rental income and steady capital appreciation, Liverpool represents a golden opportunity. The combination of affordability, strong rental demand, and future growth potential makes it a city you want to watch closely as we move into 2026. Now let's talk about Bradford and Leeds. Bradford is emerging as one of the fastest growing cities outside London, with affordable housing and rental yields sometimes exceeding 7 to 10% in hotspot areas. Renovation projects and commuter-friendly zones make it ideal for new investors, offering high returns for a relatively low entry price. Leeds, on the other hand, continues to thrive economically with strong employment in finance, healthcare, and digital sectors. The large student population and influx of young professionals create consistent rental demand. HMOs and modern flats near universities or business districts are generating solid returns. Both cities show that northern UK property is not just affordable. It's profitable, and they offer a mix of yield and capital growth that is rare in many southern markets. Investors who position themselves in Bradford or Leeds now are likely to see consistent rental income and potential price growth as these cities continue to expand. Continuing with opportunities, emerging cities like Wakefield, Nottingham, and Sunderland are full of hidden potential that many investors are completely overlooking. Wakefield is seeing major regeneration, with rising rents and increasing demand from commuters who are priced out of nearby cities. Nottingham boasts a large student population, high rental yields often around 7 to 8%, and growth fueled by urban redevelopment and housing demand. Sunderland is benefiting from transport improvements, affordable housing, and steady rental returns that make it ideal for investors with a lower budget who still want good yields. These cities are overlooked gems, meaning you can get in early, buy affordable properties, and ride the wave of growth before everyone else notices. The key to success as a new investor in 2026 is finding areas with regeneration, infrastructure improvements, strong local economies, and growing tenant demand. Northern cities like Manchester, Liverpool, Bradford, and Leeds check all of these boxes, and emerging smaller cities provide entry points for those with limited capital who still want above-average returns. For first-time investors, the combination of affordability, strong rental income, and long-term capital appreciation is the perfect formula. If you're watching this and thinking that property investment is out of reach, now is the time to start paying attention. The northern UK market has shown resilience over the past few years, even when London and the southeast have cooled, meaning your investment could grow steadily, while others struggle to find reliable returns. Rental demand in cities with universities, regeneration zones, and major employment hubs remains extremely strong. Whether you focus on student accommodation, HMOs, or family homes, the key is to be strategic about location, property type, and rental demand. In addition, the new generation of investors is paying attention to trends such as commuter towns, mixed-use developments, and areas near transport upgrades, as these factors are driving future price growth. Timing is critical, and 2026 could be the year where early movers secure properties at prices that are still affordable, but with high potential for both rental income and capital appreciation. So, when considering your first property purchase, focus on the cities we've covered and look at areas with ongoing regeneration, strong tenant demand, and affordable entry prices. The hidden opportunities in smaller cities can provide yields and growth that larger, more expensive cities simply cannot. This is your chance to enter the market strategically, capture rental income, and ride the wave of growth in 2026. Don't underestimate the power of getting in early in these overlooked cities, because they are poised to outperform many traditional investment locations. The key takeaway is simple. Research, strategic positioning, and a focus on rental demand will allow you to maximize returns and avoid common pitfalls that new investors face. Watching this video until the end ensures you have the insights to make informed decisions and gain the edge over other investors who may not see these opportunities. Many new investors ask how to choose the right property in these cities, and the answer is simple. Look for locations with rising demand, regeneration projects, and strong rental yields. In Manchester, Liverpool, Bradford, and Leeds, there are multiple hotspots where these factors come together. Transport hubs, university areas, and redeveloped neighborhoods consistently outperform others, providing higher occupancy rates and stable rental income. First-time investors often focus on apartments, HMOs, and small family homes, as these deliver predictable returns and are easier to manage than large properties. For those with limited budgets, emerging cities like Wakefield, Nottingham, and Sunderland offer incredible potential. Entry prices are still affordable compared with the South, yet rental yields remain impressive, often between 6 and 8% depending on the area. The key is to buy in locations where regeneration or infrastructure projects are planned, as these will drive both rental demand and property values in the coming years. Investors who position themselves early in these areas are more likely to benefit from long-term growth, while avoiding the higher costs of established markets. Another strategy is to consider mixed-use developments, which combine residential and commercial units. These are increasingly popular with tenants and provide an additional layer of income potential for investors. Student accommodation and HMOs near universities remain strong performers, particularly in Leeds, Liverpool, and Nottingham, where the student population continues to grow. Even smaller cities like Wakefield and Sunderland are seeing rising demand for these types of properties, providing consistent rental income. When choosing a property, it's essential to consider local economic growth, employment rates, and access to amenities. Areas with high employment and good schools attract tenants and maintain high occupancy levels. For first-time investors, securing a property in a location that meets these criteria ensures that you're not only earning rent, but also setting yourself up for capital growth as the market develops. By focusing on northern cities and emerging mid-sized locations, new investors can access a combination of affordability, rental demand, and growth potential that simply isn't available in many southern cities or London. Timing also plays a key role. 2026 presents an excellent opportunity for new investors to enter the market strategically, capture rental income, and secure properties before prices accelerate. Investors who act now, while monitoring regeneration and demand trends, are positioned to benefit the most. This isn't about quick flips. It's about long-term, strategic investment in cities that are undervalued but have clear growth trajectories. The most successful new investors will focus on areas with clear infrastructure improvements, strong tenant demand, and affordable entry prices. By carefully selecting your property and city, you can maximize returns, enjoy stable rental income, and participate in the growth of these exciting UK markets. Now, let's reveal the hidden opportunity that many investors are completely missing. While the major northern cities like Manchester, Liverpool, Bradford, and Leeds are obvious choices, some of the smaller emerging cities offer massive potential for new investors willing to do their research. Wakefield, Nottingham, and Sunderland are all experiencing regeneration, rising rental demand, and affordable property prices that make them perfect for first-time investors. In these cities, you can often buy a property at a fraction of the cost of London or the South East, yet still earn rental yields of 6 to 8%, or even higher in certain hotspots. The key is to identify areas where infrastructure projects, new transport links, and urban development are planned. These improvements increase property values, attract tenants, and reduce vacancy periods. First-time investors should pay close attention to commuter towns near major cities, where rental demand is growing due to people seeking affordable housing with easy access to work. Mixed-use developments are another area to consider, as they often provide stable income streams from multiple sources and are becoming increasingly attractive to tenants who value convenience. Timing is critical. By entering these markets in 2026, you position yourself ahead of the wave, securing properties before wider investor interest drives prices up. Strategic investment now can yield consistent rental income while your property appreciates over the next few years. Remember, property investment is not just about buying a building. It's about understanding the local market, knowing where demand is growing, and choosing the right type of property to match tenant needs. The combination of northern cities, emerging mid-sized towns, and regeneration hotspots provides the perfect blend of affordability, rental yield, and capital growth. For new investors, these are the locations that offer the best chance of success. To maximize your returns, focus on cities with strong local economies, low vacancy rates, high rental demand, and planned infrastructure projects. Keep an eye on student populations, young professionals, and areas with new commercial developments, as these tenants drive long-term rental income. By strategically selecting your property in one of these 5 locations, you can start building a property portfolio that generates steady income and appreciates in value over time. In conclusion, 2026 presents an incredible opportunity for new property investors in the UK. Manchester, Liverpool, Bradford, Leeds, and emerging cities like Wakefield, Nottingham, and Sunderland are all primed for growth. The key is to act early, research carefully, and focus on locations with high rental demand and long-term growth potential. Comment below which city you would invest in first, and make sure to subscribe for more insider property tips and strategies for UK investors. The early movers always have the advantage, and by watching this video, you now have the insight to get ahead of the competition and make informed investment decisions that could change your financial future.